was going to do a problem out of the book, but I think I might just skip and go right to the practice exam. Just, I don't know, this chapter's kind of dragging on. And it's just because these are tedious. They're not, I don't think it's overly complex, but it's just tedious. Anyway, today we're going to do the multi-step income statement, which we talked a little bit about last time. And those are problems 12 and 14. And hopefully today will be a shorter class. We'll see. So today we're going to finish up the chapter 6 handout. And that's it. Okay, so let me go back here. I think we already talked about this, I'm pretty sure. Not that. We did talk about that, but this one. So the multi-step income statement, kind of like the classified balance sheet, in that you kind of lump things together that kind of go together. So in that way, it's similar to a classified balance sheet, that you put things that are alike in some way, you kind of group them together. And for the income statement, it's kind of grouped as far as importance is concerned. The first couple things here are more important than, for instance, some of the stuff later down. Here it goes. So, and we'll talk about that as we go through it. But we remember the order by Scoot, which we'll do again is this: sales, which we've done already, cost goods sold, because this is our gross profit. That's exactly like we just did. Then there's these other ones: operating, other expenses, taxes, that we'll go through. But we kind of separate things out by importance on the income statement. Okay, so let's go to problem number 12. And so what I'm going to do is hopefully you guys can see this. So this is going to be our multi-step income statement. And we are going to start out with, I'm going to do something here. I'm going to bold these so that they're a little more visible. Okay, so we're going to start out with S, which is for sales. And oops. So what do we have for sales? Oh, come on, you guys are toying with me. What do we have for sales?
2,500.
Yep. The sales revenue down here. You can copy and paste that if you want. So it'll be sales, or it could also be sales or revenue. They're the same thing. And that is 2,500. Now, there is something about these sales, though. And that is this here. Some of this stuff has been returned, or a discount. A discount would be, for instance, if somebody ordered a red one, you sent a blue one. Maybe, some kind of an allowance for it. If you keep the blue one, we'll knock off $10 or whatever. Okay, so oops, remember. So these returns and discounts are going to decrease the sales. Right? People return this stuff. So this is what they call our net sales. 2,500 minus 50 is 2,450, I think. So this is what we really sold. We sold 2,500, but they brought back 50 of it, or we gave $50 or whatever back to them. So our real sales are this. This is what our real sales are. Okay. So these two are done. Next, we go to our C, which is our cost of goods sold. And you gotta assume you guys know what cost of goods sold is. It's cost of goods sold. So our cost of goods sold was 1,300. And this will give us our gross margin. $1,150. I know. I'll put my doggy slash. Okay, so 2,450 minus 1,150. Again, that's just like we had before. Oh wait, I'm sorry. Gross profit. They're the same thing, but I think the book uses gross profit, so we'll stick with what the book has. Okay, now the gross profit, you remember from before, we have our sales minus whatever the cost was of those things that we sold. And then that gives us our gross profit. Now you'll notice that that's only for the cost of the goods. It doesn't have anything to do with the rent on the store, the employees, paying the employees, paying the electric bill, all that kind of stuff. All those things are not included in the cost of goods sold. The cost of goods sold is only what it says, the goods. What did they cost us? So there's all these other expenses that come out besides just the cost of the goods. And that's what we're going to get into next here. That's not what I meant to do. Here we go. All right. So the first O, and arguably the most important O, is operating expenses. And these are the expenses that are necessary for the business. The expenses you have to have. For instance, paying employees, you have to do that. Paying the electric bill, paying the rent on the store, all that kind of thing. These are things that are necessary for the business to keep going. You have to have them. And the two most common ones, the ones that we're going to use are, oops, let's cross this out. Selling. Oh, yeah, like these. And general administrative expenses. So those are the two that are going to be in operating. So selling expenses, that's the cost of the store, say paying employees, paying rent, all that kind of stuff. And administrative stuff is things like accounting, management, all that kind of thing. Okay, now, so here's what we're going to do. We are going to go from so this is what we have left over after selling our goods. We're going to subtract out these two things, and this will give us our operating income. Okay, so we have 1150 minus 680. Man, the 680 is arguably the most important number on the thing. This is what the business made on just their core business. So whatever they're in business to do, this is what they made money on, just their core business. So if it's McDonald's or whatever, it's what McDonald's made on their core business of selling food. And analysts will oftentimes look at this number saying, okay, this is the most important number because this is the stuff that is A, it's under the company's control, and B, it's necessary for the business. You know, it's a reflection of how well they run the place. Okay. The second O is for other revenues and expenses. And oops. Expand this a little bit. These are things that they call incidental to the business. Spell. Okay. So these are those things that they happen, but they're not necessarily what you're in business for. And the major ones here you're going to find are anything that has to do with interest and gains and losses. So interest and gains and losses. Okay. Now, here's the tricky part about these. These can be pluses or minuses. Now, if it's a gain, it's a plus. Loss, it's a minus. Okay, so loss on sale of asset. $60. Is that going to be a plus or a minus?
Minus.
Minus. Yep. Interest expense. Uh, 15 plus or minus?
Minus.
Yep. And lastly, interest income. So if you had a bank account or something that was getting interest, 25 plus or minus?
Plus.
Good. So again, and you kind of see that these things are kind of, they're things that A, you don't have control with, however, and B, things you're not really in business for, whatever it is. If you're selling goods, you're not really in the business of making interest. If you sell a sale of an asset, for instance, you sell a delivery truck or a shelving unit or whatever it is, you're not really in the business of selling shelving units. Right? Okay, and this will give us our income before taxes. Oops. So we're going to take the 680. It's kind of like a running total here. So this will be the 680 minus those things. Time for my calculator, Cam. $630. I think that's right. You want to check that. Actually, maybe I'll check it. 680. Yeah, that's right. Okay. So this could become, that's our interest before taxes. Well, you can probably guess what comes next. Taxes. So this will be our income tax expense. $75. And this will give us our net income. So 630 minus 75. 555. Any question on that thing? So it's sort of like you give different stopping points along the way. And again, you know, all of these kind of stopping points to see how much money you're making for different things. You know, there are different people, people analyzing it will have different things as far as what they use those for. I'll tell you something that's kind of interesting in all of this a little bit, and that is when it comes to accounting, we're very strict. You know, this is where this goes, this is where that goes, that kind of stuff. But when it comes to people actually analyzing companies, there are things that you know they'll teach you in finance and that sort of thing, but it really is a judgment call. It's people's judgment as far as what they actually use to evaluate companies. And you know, so while we give them, as accountants, we try to give people as much information as we can. We have to know the transactions so that we can enter them, so that we can categorize them correctly and all that kind of stuff. But once the people that are using these financial statements get them, they are, you know, they're free to come up with their own ways of using that to figure out what's going on with the company, whether it's a good investment, bad investment, or whether they, you know, there's a different direction they should take, or whatever it is. It's up to the judgment of the people actually using the financial statements. Again, you know, and those of you that are going into finance or kind of the operations management stuff, you'll learn different techniques. But again, it's up to whoever's using it. You know, however they use the information. There is, you know, sort of a, not a gray area, but there are certainly areas that call for judgment as far as how much do you look at something. For instance, how much do you weight operating income versus net income? Operating income is just from the operations, but net income is really what you get to keep and put in your pocket. So, you know, that's also very important. And then there's also the income before taxes. The one thing that companies usually don't have too much control over is their taxes. Now, they can do tax planning, but even after that planning, to a large extent, you know, you can't just arbitrarily say we're not going to pay the, you know, we're not going to pay our taxes. The government doesn't like that. They get mad. So that's one of those things that's kind of out of their control. You know, so if you're looking at what a company can control, the taxes really aren't that. I mean, they can plan some, but oh yeah, definitely. Yeah, and then maybe I should zoom this in maybe a little. I think the next one I do, I'll do it a little bit. Definitely shorten this thing up a little bit. Okay, sorry about that. Yeah, so again, you know, companies can use it however they want. So, you know, or analysts, I should say. And two, another thing that I think people find a little bit surprising is for any given company, you will have different opinions on that company. So what I mean by that is someone might look at, I'll say IBM. Someone looks at IBM, and one analyst will say, buy the stock. You know, it's a good deal. Buy the stock. It's going to go up. You have another analyst that'll say, sell the stock. Sell the stock. It's not going up. You know, they're going to lose money and blah blah blah. You know, a lot of times they'll give the reasons why. But anyway, you can have two people, very intelligent people with PhDs from the best schools and stuff, that will come up with a different conclusion looking at the same data, which tells you that there's more than one way to look at these things. And again, you know, the top people in the industry a lot of times will disagree on whether, you know, they should buy the stock or not buy the stock, or just hold on to the stock. You know, maybe it's not going to go up tremendously, but you know, you don't buy any more. But if you have it, just hold on to it because it probably will go up a little bit. So you get these people that again, they're looking at the same data. Extremely smart people, but they come up with different conclusions on it. So that's another kind of funny thing about people who look at this information, that they can come up with different conclusions to it, even though the information is exactly the same for everybody. Okay. Any question on this thing? And again, it is sort of like, you know, it's kind of like a step down that each point along the way, you know, you get to a number, you get to the next number with sale, you know, and you just keep taking off from that usually. You might add a little bit in the other revenues and that, but you just kind of keep going on the list here and it just keep kind of like a running total. Okay, let's do this one. I'm going to. Yeah, you guys go ahead and get started if you want. I'm gonna clean this up a little. Okay. And so again, remember the order by Scoot. Make these a little bit bigger. Let me see if I can increase the size of the font on these. No, it might mess up something else, but we'll keep with this for a while. Okay, so sales revenue.
Sorry, I keep getting kicked out.
Oh, okay. And this operating income is a lot of times considered to be a very useful number for analysts. Okay. Gain on sale of equipment, plus or minus.
Plus,
And again, whatever equipment we sold, we're not in the business of selling that equipment. It's just something that happened because of the business. Okay, interest expense, minus. And interest income. Income before income taxes. Those just be income before taxes. You'll see a lot of times. Actually, I'm going to take that out. Income before taxes. Let's find the two incomes in there. So income before taxes is 26. 282. Yep, I think that's it. Okay, and T is for taxes. Any question on any of that?
No.
Okay. Well, that's it for the handout. So, and we don't have enough time to do the practice exam. So we'll do that next class. So anyway, so this is, yeah, so it's kind of how the multi-step income statement. And again, it's very similar to the classified balance sheet, and we put things that are alike, similar in some way, we put them together. And a lot of times, you know, these things, for instance, these things here, a lot of times are considered to be you know, just like on the balance sheet, not everything is equal. You know, that there are some things that are more important than other things. And so the same thing is here. That some of these are more important than other things. And for instance, the operating expenses are usually more important than the other, you know, these other ones. Not always, but a lot of times they are. Okay. Well, nice short class. Short class is a class that's enjoyed by all. That's what I like to say. All right. So any questions? So I will put. I can't remember if I already. I'll check and see in a minute here if I have the place to submit this in here. Again, if you're missing assignments, turn them in. You'll get credit for them. So don't be shy about it. If you're missing assignments that or exams or whatever, get them in and you'll get grades for them. So, okay. And I'll check to see.
Wait.
Yeah.
Sorry, my internet is just being crazy, so I'm using Zoom on my phone right now with
Oh,
data.
okay.
But could you tell me what's due on Friday? I know there was 2 things due. Right? Wasn't there 2 things due this Friday?
I think last Friday was the chapter 3.
Oh, okay.
Was it?
Well, that's done. But I was wondering, okay, maybe I just made that up.
Oh, yeah. Oh, I don't want to pull up the grade center. Let me pull up the. Check to see if I have the chapters. I'm take this one out. Ignore this textbook exercise 612. The handouts in there. I think the chapter 3 exam was due.
That was due last week.
Yeah. So no, nothing. We've again. It does seem like we've been spinning our wheels in this one because this is. Yeah. So only the handout we just did is going to be what we're going to work with is going to be due, and then it'll be due. So on the 20th and the 19th. I give a week. I get next week Friday is when it's due. And by the way, just gotta say it's due on next week's Friday. That doesn't mean that it's and actually I should probably change that one. Just gotta say it's due next week Friday. It doesn't mean that it's you can't turn it in after that day. You can't. I'm going to delete this one while we're right here. I'm going to go down to this one, and right in front of your very eyes, we will change the due date. Because I think I put the due date as the end of this week. Okay, new due date for this will be, but if you guys already have it done, you just turn it in. Well, yeah, so yeah, we're not going to do that the problem from the textbook. It's just because we got to get, I don't know, it feels like I've been putting a lot of time on here on this one. So yeah. Okay. Well, any questions on this? Okay. Well, we will go ahead and call it a day then. Let's see. Okay.
Have a good day.
I will. You too.
Thank you. Have a good one.
Okay, guys. See ya.
Thank you.